For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
Today, trader Stacey Burke from Stacey Burke Trading. In following in line with our higher time frame thesis and the understanding of hunting specific setups that rinse and repeat on any instrument, targeting high probability opportunities and staying away from minutia and science projects and market conditions that can tend to be inconsistent, unscalable, hard to reproduce for the trader day to day, and in the end, really not scalable in size and allowing traders to build and compound their trading accounts. In the last few videos, I've been putting the emphasis on traders understanding the importance of the monthly cycle, open, high, low close, open, low, high close, and how that forms our monthly bar chart. So a month will open, trade down inside of a previous month's range, or in some cases break out of a previous monthly range, looking for a first green day. Now, it doesn't mean we're going to get a first green day trade, but carrying that thesis forward throughout the month and looking for our first green day opportunities. And the same thing applies for the first red day. And then the end of the month, we can have a ranging month, one that opens, trades higher, potentially has a first red day signal, and then breaking down and closing lower and are closing back inside of the range. A ranging month, as opposed to a market that may break out or trade inside of a previous monthly range, but we may break out, have a first red day or a first green day, trading back and forth. But we want to target the highest probability opportunities. And what that means is that we're looking for months that will potentially give us one of the extremes locked in place, and we can follow that thesis throughout the month, targeting our parabolic best trade setup, rinse and repeat opportunities. Now, this is a basic model of the type of first green day trades that I'm hunting, and I went through this in a previous video. If it doesn't look like my setup, I'm not interested in trading it. So I don't try to trade a science project and then pretend to call it a setup. I'm looking for this specific setup. And why is that? Because it's easy to trade. Put an entry in, put a stop loss in place. When it clears a level, going to break even and then holding till close. Zero thinking, zero emotion, zero stress, and zero management. Now, the problem is it took me a long time to break a lot of bad behavior, bad habits. Habits of, yes, where I could have taken some trades, and they're nail and bails, and there's opportunities everywhere. But consistently trying to trade what I call science projects, yes, there are moves, and I can catch those trades. But the realistic question for myself is, okay, we can have nail and bails and take the money and run, but is it really worth my while to be trying to catch every move in a market just to say that I could figure it out and get a trade? Now, if that's my trade setup, why would I want to try and trade science projects every day when one of these is probably worth 100 of the science projects? Now, I know traders will call those other ones setups, but we're talking about asymmetrical risk reward on setups that can return 10 to 1. Now, there's going to be traders that say, well, yeah, but how often do you get those? And, you know, is that really possible? And can you do that? And here's the thing. All that mental, verbal chatter between a trader's ears is their own. It's their own chatter. If you're following a basket of instruments and you're hunting out and patient and willing to sit on your hands because you know exactly what you're looking for, whether it's in the long direction or in the short direction, the next most important thing is being able to hunt out these setups on the basket of instruments that you're following. Now, for example, we have the pound Canadian. I've mentioned that the yen pairs and the pound pairs are in my basket, and that's because they provide the volatility and the consistency of reproducing certain opportunities on a monthly basis. Now, the same as a new month starts a new timing cycle, and we can see first red day at the extreme of a new month, reversing off the high of a month, and auctioning lower down inside of a previous monthly range. Now, the reason why I emphasize this to traders is to, again, build your muscle memory. Go back through your daily charts and understand which template you're in the baskets that you're following. So, for example, if you're following your indexes, a couple of metals, oil, natural gas, and some currencies, knowing which phase a market may be in, and then whether or not you're hunting a setup or you're waiting for the market to actually put itself into conditions that now may lead you into setups in the session that you're trading. So the month auctions down and we coil sideways and put in a first green day. Now, as I mentioned in the last couple of videos, often traders will follow this and they'll look for the first green day, or they'll try to buy the low in a market that's not giving them any low of day buys. So we're making higher highs and higher lows, and the market continues to trade higher, but they're looking for the first green day opportunity. And the reason why I emphasize this is, as I've said in the ACB masterclass, one trade a week that's scalable in size, as we just talked about, is worth, in some cases, 100 times what a science project can offer traders, and a lot less stress, no emotion, zero thinking, and for the most part, zero management, because it's hold till close. Now, this is just my thought process. There are other trades we can take on other markets intraday, and we can buy the low, we can catch a move, we can grab some pips. But I always ask myself, is it really scalable? Is this something that I could put size into? And yes, I can catch a move, but how much would you put into this trade? And is it really worth sitting there for a few hours just so I can catch the move? Now, these are all the things that I think about. I'm looking for the scalable opportunities, ones that rinse and repeat and scale up in size. Now, if I'm constantly trying to trade markets that are auctioning back and forth, that can be hard. That can be stressful. I can take profits, but, do I really want to sit around and try to scalp and buy and sell all day long and get these little swings back and forth, targeting what I guess you could call a setup, but is it really rinse and repeat? How much size would you put on these trades, as opposed to a trade setup that I can scale into it's coiling and about to explode and be in the money very quickly, but also hold till close on a range expansion opportunity, whether that's in the long direction or the short direction. Now, on the pound Canadian, we have what's essentially a larger dump, coil, and pump template over the month itself. Now, remember, we could be following a basket of instruments where we are looking at some potential first red day trades or first green day trades. And as one trader said to me yesterday, well, is it really realistic to follow a pair on one signal for the entire month? And I think that you'll understand that, yes, that is very much the thesis, because we will often see months dump down, coil, and reverse, whether that's in the long direction or pumping up and giving a first red day and breaking down and reversing, as we talked about yesterday. Markets that continue to break down or continue to trade higher can be the gifts that keep on giving. Now we're into the last week of a trading month. Monday closed in breakout. We're on the back side of the month. So the front side is the first couple weeks we went down, and the second couple of weeks we've been heading back up. Now, the reason why I sort of emphasize this, because I want to hammer home the importance of targeting specific rinse and repeat setups, ones that you can scale up in size. Where traders get chopped up a lot is they're trying to catch the highs, catch the lows, or position themselves in a market that's continuing to auction back and forth. They can't hold on to it. They get into a trade, it comes back and stops them out. They don't take profits, all these little things. But when we get our setup and it sets up as an ACB template because it ain't coming back, These are the trades that we can have the confidence in to scale into and give them the opportunity to play out. There are specific criteria that allow these trades to set up the way they do. Now, if we go back and look at our daily chart, and we've talked about where is the money, the market's going back after the money. We've got shorts and a large dumping day candle that starts our month off. So when we close and break out on Monday, we're already back inside of a large range day. A large range day where traders may have been selling down low on that day, but we have a market that has closed in breakout, and that is a signal day for us. Market that closes in breakout. Monday, new week, new timing cycle, but thinking logically, where is the money? Just thinking simple, where is the money? And if we get our coiled market for an explosive move, where could this trade opportunity be taking us? Now, when we just go out to a slightly longer time frame, our 15-minute chart, we have our Tuesday coiling sideways heading into our US session window. Now we're looking for that coiled market for the explosive move, and we have a breakout candle. We have our opportunity for an entry, a stop loss, a break-even level, and a hold till close take profit. Now what's important about this is it's just rinse and repeat based on the same criteria. Understanding the higher time frame aligns us in that higher time frame thesis, and when we have a template set up for an all-in till close trade setup opportunity, these are the setups that are scalable in size. Now I understand there are going to be other trades that show up that are great session opportunities. Now make sure that you understand what I'm saying. My emphasis is targeting the opportunities that are going to be scalable. If I get session trades that are nail and bail, regardless of the distance, I'm more concerned about the setup itself and is it scalable, as opposed to a nail and bail opportunity where we can take the trade, still manage our risk. If traders want to scale into these types of opportunities, that's entirely up to them. But when we're in a nail and bail type of market condition, taking the trade, locking in the money, and then walking away. Most important part with any of the trade setups is managing yourself, not engaging in any self-sabotaging, impulsive, irrational, or impatient behavior. And as I repeat, there are only two types of templates, pump and dump or dump and pump, regardless if that's a 1-minute chart, a 5-minute chart, or a daily chart. So walking back through your higher time frames can help you identify the best candidates in the session that you're trading. So we may have buying opportunities all the way through this month after our first green day signal. There may be session nail and bails, and then we may get the ACB all-in opportunity that's scalable and hold till close. Now, the big thing, really big thing that traders need to understand when they're about to take a trade, number one, is it a rinse and repeat setup? If you're catching highs and catching lows, be careful if you're counter trending an underlying higher time frame bias. And that is the most important thing to understand. If you're counter trending because you're trying to catch the high in a market that is potentially now going on breakout and maybe even on a parabolic move, those are the types of situations that can blow out a trader's trading account. And other types of conditions are trying to catch the low in a market that may now be going to the close of the day, even if it's on a smaller time frame and a smaller risk reward opportunity situation. Mastering the higher time frame templates will help you align yourself with the highest probability trade setup opportunities, and then making sure that you don't get caught into choppy markets that are not setting up at all. They're in a trading range and now potentially are going to trap traders and chop them up in both directions. These are the types of days, again, similar, that can do a lot of damage to a trader's psyche, but also to their trading account. Rinse and repeat literally means rinse and repeat. Any instrument, same setup, Different days, different sessions maybe, but the same setup over and over and over again. Scalable in size, rinse and repeat, entry, stop loss, break even level, and then hold till close. These are the types of trades that require zero emotion, zero thinking, zero stress, because they're moving into profits immediately or very quickly after entering into the trade. And there's zero management because they're hold till close trade setup opportunities. So setups that rinse and repeat are the same setups, the same behaviors, the same characteristics, the same style of entry, stop loss, break even, and hold till close. Science projects are not reproducible, they're not scalable, and often they put traders on tilt. They put them into an impatient, impulsive, and sometimes an irrational state of mind, and self-sabotage is the number one reason why most traders will fail. Science projects are not setups, and they don't repeat. So focus on the setups that you can find and hunt out on the basket of instruments that you're following in the session that you're trading. Keep things as simple, reproducible, and scalable as possible. Block everything else out of your mind and hunt the setups that offer you the best asymmetrical risk reward that show up frequently on a basket of instruments, and all you have to do is be patient and hunt them out. Keep it simple, traders. Have a great day, and may the markets go with you.